Welcome everyone to office hours for TradersPost for this lovely June 7th, 2024. What a great day to be alive. Crypto is up, GameStop is up, and I'm here with CSO Mike Christensen and CEO John Wage. Hi guys, how's it going?
What's going on, guys?
Excellent. I'm not going to ask if anyone owns any GME or NVIDIA or anything like that, but if you're not taking part of this market, why are you even alive? You got to be part of the apes jumping into these stocks. I mean,
as usual, when it comes to those types of really quick run-ups, I'm usually the guy who takes the other sides of those trades. But I don't think I've got the appetite for shorting GameStop. I'm a little afraid of the retail crowd there.
I got some friends asking, okay, so I should do they wanted to sell calls in order to take advantage of the implied volatility.
Yep.
And I go, my God, that is just the risk on that. It's just
that's partly what's causing the gamma squeeze in it. So yeah,
that's right.
Yep.
We'll see what happens. Now the idea that guys might be up to $1 billion worth of position makes me think that all my strategies are ridiculous. I've never been close to $1 billion.
So do you think he's going to exercise his options and force them to cough up the shares?
Possibly.
It's paper gains that matter, not actual realized gains. Just what you can say you're at.
I think that's going to be the interesting thing here is Roaring Kitty being able to actualize this position is going to be very difficult. The action of selling that many contracts is going to be insane. The shares that he has to unload on the market is also insane. So I don't know if he's even able to get anywhere near the price necessary for him to actualize $1 billion net worth, but that'll be interesting. I think the last I saw it needed to be $65 a share. We're at 38.06 right now. So
we'll revisit when we're around 150.
GME did another offering too. I think they raised another $3 billion.
Oh yeah, they're taking full advantage of all this liquidity in their stock right now.
Excellent. Well, GameStop to the side. We're here every week to answer your questions about using TradersPost. Our goal is to make TradersPost the best automated trading software for you and your trading needs. And I mean, this week has been a pretty big week. John John has gone out, and I mean the new features that have been added. I think this is the largest dump of features that I've seen since I've started with TradersPost. How do you feel about the new additions, John?
It's stuff that's kind of been in the queue for a while. Stuff tends to kind of we'll do the first 90-95% of the development, and it kind of sits in an incubation period for a while we make sure that it doesn't break anything or conflict with anything else. But yeah, I usually like to try to get stuff out a little bit faster, but yeah, this was kind of a little bit of a clump of features that went out all at once.
Sure, makes sense. You have posted videos just going through some of these changes on YouTube, so you guys can always go to the TradersPost YouTube channel in order to check that out. But I did want to touch on one or two things from the release notes, if you don't mind us going over that.
Sure.
Just to get, I'm more interested in the idea here of, generally speaking, what problems some of these things were solving and what kind of new things does it open up for people. If we could touch on that.
Sure. You just want to go through them one at a time?
Just a couple of these. So in general over here, the idea that we have Kraken in beta and Alpaca options in beta, as you can imagine, that's self-explanatory.
Yep.
But this option here for signal, use signal settings enabled by default. Can you give us a little bit about that?
Sure. Just from working with customers over the last year or two, we've realized that most of our customers want to use the settings in the webhook by default. So today, or before this change, you had to explicitly enable each setting to use it from the signal. And it was just kind of a pain in the butt because you had to do it every single time, and most people want it by default. So we enabled it by default. So now if you want to disable it, you'll have to disable it every single time.
Excellent. Perfect. Over here, the next one, the order type to webhook.
Yeah, this one, you could control the order type from the strategy subscription settings, but the kind of theme of this release is giving the user more control for things from the webhook. So you can now send JSON to control the order type and have it, instead of having to control it only in the strategy, on the strategy side in TradersPost. And that just gives users a lot more flexibility so that you can have different types of orders being used within one single strategy instead of it always having to be market orders or always having to be limit orders, etc.
Do you imagine that ultimately, like all of the different settings that people would want to have or are modifying in the interface for TradersPost might be able to be done through
I
the?
think so. I mean, maybe not everything, but I think most everything. I think we'll just, we try to follow what the customers need and what they're asking for, and then also try to, similarly avoid adding things that no one wants or no one needs, because there's a cost. There's like a carry cost of, you're basically like carrying that feature forward with you forever into the future. So we want to make sure that we're adding kind of like the things that have the most value and the things that are being requested. But sure, if there's something that's not controllable via the webhook that you'd like, let us know, and we'll evaluate it. But I think as of this release, almost all of the order attributes can be controlled from webhooks now.
I think we know that the one big request people have had is being able to do basic math or expressions within the JSON payload. And we kicked that idea around earlier this week. And we think we can probably do something like that fairly quickly, where you could send along the price that you're currently observing and maybe enter 2 points above or 2 points below. You set a limit order 2 points below, things like that, where you can add some math to the JSON as well.
Yeah, that'd be a cool feature for sure.
Yep.
So as we go along here, we still have, so along the same lines, we have quantity type to webhook. So that's in the same vein as the order type, given more flexibility.
Yep. And there's one addition there, actually. The percent of position, I think, is the only like new addition. Like you could do dynamic quantity calculations for entries, but there was no way to say I want to exit a percentage of an open position. So that is a nice addition, and that basically kind of completes, like, people want to pyramid in or layer in, either people call it a lot of different things, but have basically multiple entries for building a position. And then they want to layer out as well. So they can exit, say 50%, and then leave the remaining 50%. And then at some point later exit.
Someone was asking on Discord, this idea where you can send, because sometimes you have had this discrepancy between what TradingView thinks your position is because of the strategy and then what's actually going on. And someone was making the suggestion that you can send that information, if there was a way of sending that information along with a JSON payload, that it would always, that TradersPost would always then make its calculations based off of what you're saying your open position is or whatever it is. Did you see that message? Does that make any sense to you, where as an option where people could send along information so that TradersPost is making decisions not on the account balances and the positions in the broker, but on the TradingView side?
It could be possible. I mean, it's kind of, there's two different problems. Is like the broker being out of sync with the strategy, and then I guess that the challenge is then I guess that people, as long as they know it works that way, but if they were to manually do something in the broker, and then the strategy executes something that is not reflected in the broker anymore. So you have kind of like the two problems on both sides.
Right. This dance of figuring out, because you go too far down one road, then people go, okay, well, this is only
it's basically saying like which one is the master, like we're the source of truth. And like right now the broker is the source of truth. Like if you add a quantity or add to a position, then when you send the exit signal, should it only exit the quantity that the automated strategy exited, or should it exit the full quantity in the open position? And right now it exits the full quantity unless you explicitly send the quantity. So I feel like with the way it is right now, you get kind of the best of both worlds, but it does require you to manage that quantity more explicitly. But I mean, it might be possible to enhance the JSON to send more information about what the state of the position is according to TradingView, so that we can try to reconcile it somehow.
Interesting. All right, next up over here, we have the option chain scanning that can be controlled from the webhook. Can you give us a little overview of what this idea is?
Yeah, so these are settings that were previously only controllable from the strategy subscription settings, and going along that same theme, we wanted to just give more control to the webhook. So you can control these settings and send them along in the webhook, and they'll override whatever is defined in the strategy subscription. And
Excellent.
then the next one's kind of the same thing. You can, instead of scanning the option chain, you can just send an explicit contract.
Perfect. So are there any of these other features that I know, like I said before, you've touched on a lot of these inside of the YouTube videos you've put out, but are there any ones here that you're like really excited by or that you impressed yourself with?
I mean, this is pretty boring stuff, frankly, but I mean, I think it's important for the end user. It's like it's making, like, when we launch new features, sometimes like they'll be like an MVP where it's not fully fleshed out, and we do that to get it out there early and get feedback. And once people start using it, it kind of confirms the things that we knew were missing that we needed to add. And that's kind of us. This release is kind of like finishing that motion and making sure like all the features that we have out there are fully feature complete and have all the controls that people would expect. But yeah, I mean, I'm excited. I like working on that kind of stuff. So it's exciting to me, but it's pretty standard. It's not AI or anything crazy like that.
All these new AI features that are coming out, I'm like, it's so lackluster. Like what we wanted to do was put the keyword AI next to every one of our features. It's like, okay, yeah, I get it, fine.
Yeah, like I want to work on that kind of stuff, but also it's just doing the simple stuff, I think, is also still really important. Just trying to not get too distracted by the shiny new tech and stuff like that.
I do think, that a lot of the payload stuff that we just released is fantastic. It kind of opens up a lot more control for our users to, decide how they want their trades to execute from TradingView, and not have it all kind of baked into the settings of the strategy. Really cool stuff. I don't want to gloss over the fact that we did just launch a new broker, though, and Kraken is one of the many crypto brokers we've had requested. We're working on, several others as well. Binance is one of the ones in the pipeline. Sorry, John, what's the other one we had?
Alpaca Options?
Alpaca Options is also out, yes, but we had one more crypto broker we were about ready to release.
Kraken, well, Bybit is out there, Kraken, and then Binance is coming soon, but it's not available yet.
That's right. Okay, so it is just Binance left. But yeah, Kraken's a big one. The Alpaca Options is brand new. I know the Alpaca team's really excited about that as well. And it's just one more way for people to find another trade. So if your favorite crypto broker is Kraken, feel free to give that one a try.
Excellent. In the comments here, we have a question from Ezra, or a statement. They were saying that they were essentially the signal from TradingView didn't come through in the timely manner that they thought it would. So I just wanted to bring this up because there was a discussion in the Discord group about this sort of idea from a few people. And when they reached out to TradingView in order to get more information as to what was going on, if they had already deleted or modified their alerts, they didn't have access. TradingView didn't have access to be able to troubleshoot or to verify anything. And so someone shared it in the Discord, and I'll mention over here that if you do have this discrepancy with alerts, you might want to open up a support ticket with TradingView first before you modify anything.
For sure. Yeah, and I think in this case, it is kind of interesting that it happened exactly 2 minutes, 20 seconds later. It makes me wonder if there's some kind of issue on TradingView's side in terms of calculating the alert at the 32-minute bar. That is obviously an unusual interval on the charts. And I recognize that TradingView supports any type of interval, but perhaps their alert system is not designed to handle those unusual intervals. That's a TradingView question for sure, though. That was just my suspicion that it may have to do with the 32-minute mark.
There's also like issues where I've seen issues where, like, if you're using live data, I mean, if the live data has any kind of blip in it where it's not coming in, then that alert can be delayed. And it usually doesn't happen often, but if you're using, I don't know what symbol this was for, but I remember hearing from TradingView support that there are particular exchanges and particular data feeds that sometimes have more delayed data. So Like even though the candle is closed on our clock, TradingView hasn't necessarily received all of the data on their end in order to close the candle.
That's interesting. And it's a good point. A candle's not considered closed until it gets the next match. So if it never gets a match within that 32-minute window, then the last match is the close price. And then the next match, it would be the open price of the next bar. So perhaps it has something to do with that.
It'd be really nice if, I don't know, is there a way to, because like it's on close, but it's not really on close. It's kind of on the open of the next candle, right? Or is it actually?
I think we're speculating as to how their alert engine works at TradingView. Right. I'm not quite sure.
It's along the same lines of the other issue that intraday charts are treated very differently than daily charts or daily and above. And there's some document we talked about it on the previous office hours where TradingView is like recreating the intraday charts using the bid-ask spreads, and so sometimes you get something completely different on the daily chart than on the intraday chart, which is I wish they would just explain to me exactly what the what the issue is, but hey, you can't always get that.
Hey Ezra, if you can comment, what was the symbol and exchange that you were trading? Because I never get delays like that, but I'm trading like the Qs and SPY, and things that are just like super, super liquid. So I don't know if it's something related to the exchange that the data is coming from.
Well, he makes the statement over here that he'll add to his JSON payload the time when it was sent, and I always do that. I think even in the documentation, in the TradersPost backend, it even like has time now as the variable that's there as a suggestion. Very useful for when you're trying to match up the
it's SVXY.
Yeah, that's the short VIX, short term. So there's plenty of liquidity on that. There'd be no reason that on the 32-minute bar there would be some delay in a match because there's plenty of trading activity on that one. That's an interesting one. And I think again our point earlier about not modifying the alerts and immediately reaching out to TradingView support would be the way to go, because then they can actually investigate what happened in their alert engine behind the scenes.
I'll sometimes have my one of my screens with video recording of the live chart, just so I always have it there. Oh, but we can't do anything. Well, you can, because I have everything recorded.
Exactly. I brought the evidence. I have receipts.
All right, so that's perfect, John. So thank you for giving us a little bit of that run through for the new releases. If you want to stick around for the questions, we can. We only have a couple, but I want to point everyone. Please go take a look at the videos that were released recently on our YouTube channel. You'll get a lot more details about the new features.
There was one thing, I don't know if it's on the list of questions, but it's something that Ezra actually asked about the terminology of options. Did that make it to the list of questions?
No, I don't have the terminology. No, I don't have that.
Well, he asked to comment on YouTube. Can I just share my screen and cover that terminology real quick?
Sure, of course.
I guess I should have done it when we were talking earlier.
Oh, no worries.
Can you see the screen?
Yeah.
So I think he was asking about these variables and what they mean. So the expiration is basically the minimum expiration date. So when we're scanning the option chain, anything that's before the expiration gets filtered out, and then we select the first expiration date. So plus 6 months basically just means add 6 months to whatever the time is right now. And that becomes our minimum expiration date. And then the option type is either call or put. And that's basically what gets used to filter the option chain, so that we narrow the universe of contracts to select from. And then intrinsic value is either in the money or out of the money. Again, that's just another filter that narrows the universe of stocks to either ones that are in the money or out of the money. And then strikes away is basically the selector that says,
1 sec.
Oh God,
I didn't get that.
Siri. Hoping you guys can hear that. Siri's always butting in. I need to just turn that off. And then strikes away is basically selecting the number of strikes away from at the money. So if you select 12 strikes, you have 6 in the money and 6 out of the money. And if I say I want in the money contract and I do strikes away, then it's going to move up 2 positions and select the second strike price away from at the money. So those are the only filters and settings that we have on options. So hopefully that answers Ezra's question.
Perfect.
Cool. He says thanks. Awesome. All right. Well, I'm going to bounce out then. I appreciate the time, guys.
No problem.
As always, John, good to have you.
See ya.
Okay, let's run through those customer questions.
Perfect. So the Automator on Discord asks, is it possible to have multiple strategies running in parallel for the same broker?
So yes, short answer. The caveat to that is that you need to be very careful, because the way our system works is that we manage your open positions, meaning any number of shares that you were long or short, any number of contracts that you were long or short, we always look up when managing your position. So if you send an exit signal, we're going to go look up how many contracts you have, and we're going to sell or buy the number of contracts to flatten your position. So what that means is that if you are trading 2 different strategies, one's mean reversion, one's trend following, and they're both in the same TradeStation broker, it's both in futures, and you've got one set up on ES and you've got another set up on ES, there could be a major conflict between the two, in which you could have a buy and a sell signal come in at the same time, and all of a sudden your trade doesn't execute the way you expect because you have a conflicting trade from your other strategy. The best way to get around this, of course, is to open up multiple accounts. You can set up, I know with TradeStation, they'll allow you to have multiple accounts under one login, and that would give you the ability to run those strategies in parallel without conflicting with one another. Another option, of course, is adding a different broker and trading the same contract over there. Or, finding a way in which you're trading a different instrument. Maybe instead of ES, you're trading, the next contract, or maybe the micro ES contract in order to make sure that there's no conflict between those 2 strategies. So just be careful about trading the same symbols in multiple strategies. Otherwise, if you're not trading the same symbols, then absolutely have fun. You can run as many strategies as you like in the same broker.
Perfect. All right. Next up, we have a question. This is from a new subscriber to TradersPost. They're saying, "Hi all. Today's my first day here. Wanted to know about which broker you'd recommend for options trading. I haven't actually tried this myself, so I don't know if you have a preference, Mike, for which ones are great for options."
We're always going to go to our friends at TradeStation. Of course, they're one of the best brokers on our platform in terms of all the features that they support. They have obviously option support. Alpaca, we just launched option support for. Tradier is a fantastic team as well. We love those guys. And then, for a long time, TD was our other options resource up until the Schwab acquisition, which is no longer available. So the best 3 are the 3 on our platform: TradeStation, Alpaca, and Tradier. Since Alpaca is kind of a new entrant to our platform, I would definitely say that that's something to play with first, to verify that your contracts are executing the way you expect, and you're getting a price that you expect, and so on and so forth. But check the pricing between the 3. I think oftentimes people's choices as to which broker to go to comes down to their trading activity, how often they trade. If you're a pretty active trader and you're putting several contracts in through a day, you're going to be looking for the lowest cost per trade possible. So some of the subscription-based brokers out there are pretty interesting for that reason alone.
Cool. All right. Next up, someone was asking, is it possible to trigger trades from Discord alerts? So you can. Discord does have a webhook feature within the system, and so you can create a bot that can send a signal out from Discord with different types of conditions. How exactly you want to go about doing that, and how the message is built, all that, you'd have to go through the documentation in order to figure out some of the nuances there. But it is definitely a possibility. Just a note there as well, Telegram also allows you to do that. It's not as in some way creating a bot on Telegram is a little bit more user friendly, but you get some more flexibility that I find with the Discord. Telegram, you often have to like send the signal out to some sort of third party thing. Like I'll do it on a server or something like that, modify what I need to modify, and then pass the signal on. So it just depends what you're looking to do. Finally, here. Sorry, go
Let's
ahead.
check this this question from Ezra here about option strategies.
Is this last one?
Yeah. So good question, Ezra. Ezra, thank you for this one. We are exploring this opportunity. It's not currently possible with TradersPost to execute more complex option strategies like iron condors, spreads, things like that, because right now we only support the ability to have a directional options trade, meaning you can basically have a call or a put, and you can express the direction there, either you're buying or selling. In order for us to support these more sophisticated option strategies, we've got to do some extra work on our side. So it's on the roadmap to support this type of thing, but it's not currently available. In the future, it will be a single JSON though. You would send over a signal to say like, here's the rules for how I want to express my iron condor and the filters for each one. And it would all get expressed as a single payload. That way, all the trades go through all at once. You wouldn't want to necessarily execute the trades one by one, because one might fail, and then you're exposed to some kind of risk within your options trade that no longer becomes an iron condor, but obviously it becomes a insane nightmare instead.
Right. I know we were talking about this internally a little while ago, and that idea that people are, when they're executing some of these options strategies, they're expecting a certain type of behavior for how it's executed at the broker and what they're allowed to do. Some of these things, like I've had that experience with my account, that if I try to manually create those positions, I might not have the funds available to do both legs of it. But if I did it together, well, then they would allow the position, because one side is offsetting the other ones. And so we know that people have some of those expectations there, and so we wouldn't want to put in a feature like that where you have that underlying expectation and it's not satisfied.
Yeah, I think that's the right way to look at it. I think it's smarter to not take the trade at all if not all legs of the option strategy can be executed for whatever reason. So if that's a margin requirement or an account balance issue, or maybe there's just simply no contracts available to fill the order within the filter that you've provided, then it'd be better not to take the trade than to only take part of it, because then you're not even expressing an iron condor anymore, or whatever the trade expression needs to be.
I've been in those situations where I've accidentally just sold one part of my my option strategy, and I thought I had sold the whole thing, and all of a sudden I'm looking at my balance. I'm like, oh my god.
Yeah, not fun.
All right, so the last question here we have, I should ask this with John here, but basically there was a whole conversation in Discord about this, of how should we be thinking about the sentiment field in a trade signal.
Yeah. So the sentiment field is really kind of an artifact to supporting TradingView. If you look at the TradingView documentation, you'll see that there's a standard payload. And yeah, appreciate it, Tom, if you want to pull this up on your screen. In our webhooks, or excuse me, in our TradingView documentation, you'll see that we talk about a strategy payload. And the strategy payload is basically a way to take any TradingView strategy and create one alert from that strategy. And TradingView has these specific payloads that define how a strategy should be executed. It's either action buy and a sentiment is long, or action buy and the sentiment is short, and there's different parameters there. So what we did is we created a payload that allows you to capture the way that TradingView strategy payload works. But the sentiment field is really only relevant to that. You can still use it, of course, but the idea is basically to define the direction of your trade. If you don't want to use the sentiment field, you're welcome to leave it out and just use the action buy or action sell, action add, or action exit. Any of those actions will effectively allow you to express your trade the way that you're hoping for. But again, the sentiment field was designed just to support these standard TradingView strategy payloads.
Yeah, I've seen a number of times. I mean, not a huge number of times, but a few times where they've left that sentiment field inside of their trade signal, and then a behavior that they're expecting doesn't occur because it only does either ignores the trade altogether, or it doesn't take it. So, for example, someone had like a short position active inside of their account, and then they're trying to send a buy signal, and then the behavior just doesn't jive. This is generally easily diagnosed by us when you send us a message. We can see your trade logs. Generally speaking, Cam or John or what have you just points out, well, you have sentiment flattened there, but it's something to keep in mind.
Yep.
All right, so I just wanted to end here on one thing. I saw this the other day, and to me, it was like just a quintessential reason as to why automated trading can be so useful for certain types of traders. So this is a Reddit post that I saw yesterday. So the person was saying, "Hey, I was up about 2,000 after the first hour, stopped and went to the gym, and told myself not to touch it. Of course, they couldn't stop themselves. They came back in. They then did a couple of trades. Next, you know, they're up 2,000. The 2,000 that they were up, they're down that, and now they're actually down negative 3,500 for the day, right? And they're just saying, well, they're an idiot, and why did they do this? Why could they not stop themselves from trading? I just want to bring this up because it's like, I mean, I've been in that situation too. I'm sure, Mike, you've been in that situation too.
For sure.
And one of the major benefits of automated trading is that it helps get rid of this sort of thing. Like, you can do your manual trading if you want to. No one's going to stop you from doing that, and it's useful in order to discover new strategies and understand how you want to develop your algo. But once you have a strategy that you have a reasonable expectation is going to have repeatable results, positive repeatable results, systematize it, turn it into an automated strategy, and run it. Just have it running and working for you while you go do something else and learn something else. And seeing post after post of things like this, and the comments are filled with like, yeah, me too, me too, me too. I wish there was a way I could avoid this. I feel like going and replying to every single comment and going, you know, if you use TradersPost, if you use an algorithmic trading company, a platform like ours, you really cut into that sort of FOMOing, or not even FOMOing, the I did so well, now let me double down, because if I made 2,000, I could make 10,000 if I just apply the same sort of mentality.
Yeah.
What do you think about that?
I love this topic. I think it's one of the hardest things to overcome as a trader, particularly a discretionary trader, is distinguishing between luck and skill. And the skill of taking that initial trade probably came down to knowing that this was a good signal. There was strong support for my thesis. I knew where my entry needed to be. I knew where my exit needed to be. And it seems to me that that first trade was a fantastic trade. But then you assumed that the skill that got you the results from that first trade would then repeat themselves immediately in the follow-up trade when that signal is no longer there. The trade activity you're hoping for is completely different. The market sentiment might even be completely different. And so that over trading scenario, I think, shows up quite a bit, where we assume that with that skill that we're bringing to the table is repeatable over and over and over again with every trade we take. And I think the bigger skill to develop is knowing when not to trade, when to back away from the market and wait for that solid signal again. So to your point, Tom, the beauty of an automated strategy is that emotional drive to constantly trade every single thing you see on the chart isn't there. It's only going to trade the signal that has the highest probability of success, and that over the long run will help you distinguish between skill and luck. That the lucky part is, going back to this example, he may very well have actually done well on the second and third trade that he followed up on, and assumed that that was skill when it may have just been luck. He may have been riding a really good wave to the upside or downside, or however his trade was expressed, and believed that that skill was so good that the next day he shows up to the charts thinking, I'm just going to do the same thing again. And you've got all these ideas in your mind about how much money you're going to make as you compound, one result after the next. not realizing that one trade was skill and two of those were luck, and the next two may not be luck at all, or at least it's going to go, you're not going to catch the same luck that you had before. So I think this is tough, where, it's very easy to believe that when we do really well in markets, that skill is repeatable in every opportunity we see on the charts. I've definitely dealt with that, where I can't, sometimes I can't resist trading, and I start revenge trading, or I chase after something. I look for something in the market that's not even there. I've had to overcome those things by thinking more systematic, thinking through it in a more probabilistic way. What is this opportunity, and what's the likelihood that I'm going to lose, and so on and so forth, and placing my bets on each one, creating a proposition for each trade, if you will, rather than just being like, oh, well, I've been doing this for so long, I'm so good at it that of course I'm going to win this trade.
There's those three things that I try to keep in mind. One is Mike's voice in my head being like, okay, you're an idiot, don't do that trade. But the idea of large numbers, the law of large numbers, that the performance, you run a strategy, you test it over 6 months, 3 years, whatever it is, and you go, okay, this is the performance that I should be expecting. And so if I'm temporarily outperforming my strategy, that means the more I trade, more likely I'm going to head down towards that performance number. And so I should stop. I should stop because I beat my own expectation for my success. And the law of large numbers says that as I continue to trade, I'm likely to come to the to what my performance is. The second thing is the choosing your pain. I think Dr. Pippa Milgram talks about this, where you're choosing your pain in the market. There is no way to not have the pain. The odds that you pick the perfect bottom and perfect top, or if you ever do that, should be an assumption. Then I was lucky. If I chose the bottom and I sold at the top, then I was lucky. I should stop right now. Everything else is I missed the trade. I was in too long. I got out too early. I got out too late. That's it. It's just you're choosing which pain you can deal with. And so in order to mitigate that, what I do is I send, as soon as I make a profit, I pay myself. I send my whatever percentage of that 20% off out of that account, so that to get it back in would be a huge effort. Like I send it through 3 steps in order to get back to me. So I can't quickly get the money in. And every time I try to quickly do it, every step of the way I go, am I doing this? This is a really good idea. And I talk myself out of the trade. And then also, let's say I'm up $2,000 on a position. If I come back and I want to overtrade, I only trade with half that profit. So I go, fine. If I get to 0, then that's what it is. And I failed. I was stupid. What this guy, I'm sure, did, he lost to 2,000. And then what do? You go, I got to make that back because I was up 2,000. I got to get back to my high water mark. And that's where you got to negative 3,500. Yeah. And as soon as, if you can't handle the pain of being at 0, of losing your gains, trading is not for you. You cannot be successful.
I think this is what I loved most about systematic and quantitative and algorithmic trading, whatever word you want to put in front of that. It's all kind of under the same domain, but it forces you to think statistically. It forces you to think in probabilities, because the results of the performance of your strategy is largely based on exactly this scenario. We're looking for the consistent skill of taking the right trade over and over and over again over a long period of time. And I say skill, even though I know computers aren't really skilled from that perspective, but that is the same representation of your equity curve if you had that same skill. The skill would show up in your performance over a really, really long time if you were executing every trade exactly the way it should be executed, taking the signals with the highest probability. And of course, taking your stops out at the time that you said you were going to as well, keeping that positive expectancy over a long period of time and managing drawdowns along the way. So when we develop these strategies, effectively what we're doing is we're saying, I'm going to take that emotionality out of the equation and trade exactly the way I would hope I would trade. And I know in the past, I've always referred to it as like, I know my trading bots are not going to show up drunk on Monday morning from the night before because I had a great Sunday night and suddenly decide, you know what, screw it. I'm just going to apply some leverage to this and just go nuts with it. It's going to trade the way I expect it to, and that's going to lead to better, consistent results.
Excellent. All right, so we'll leave that there. This has been a great office hours. I mean, any day that John shows up is always fun. I enjoy his brand. It's very practical, very high-level overview. It's always a lot of fun to see what he releases. As always, we solicit your questions from support tickets, from Discord, from Twitter, anywhere you want to post it, but also YouTube videos. You can always post it in the YouTube videos, comments live on the office hours like you've seen today, or on past videos, because we always go through those in order to help you out. Our goal is to make sure that TradersPost is the best automated trading platform for you and your needs. And for that, we need your feedback, and we're always grateful to get it. So I'll leave it there for this Friday, and I'll wish you a great weekend.
Sounds good. Happy Friday, everybody.